You've got a solid business idea. Maybe it's house cleaning services, mobile pet care, or could be as simple as driving for Uber. So what's next? Forget about designing a logo or drafting a tedious 10-page business plan. To legally launch a business in Canada, you really only need to tackle 7 steps. Honestly, you can knock them all out by the end of this week. Today I'm breaking down exactly how to start your Canadian business. Quick note before we get into it, this is for education and entertainment, not professional financial or legal advice. Everyone's situation is a little different, so check with your accountant or lawyer for your specific case. If you already got an idea, whether freelancing, consulting, selling something, or doing a bit of work on the side, this video is for you. The biggest mistake I see isn't picking the wrong structure or the wrong name, it's waiting. Waiting until you feel ready, until you've got a logo, or until you read one more article. Let's flip that. Stop trying to become an entrepreneur someday and start operating like one today. Step 1. Pick your business structure. This is your first real decision, and it matters because it affects how much your tax, how much paperwork lands on your desk, and how exposed you are personally if something goes sideways. There are 3 options. First option is sole proprietor. For most people starting out, sole proprietorship is the right call and it's the default for a reason. There is no separate business tax return to file. You report your business income and expenses on your personal tax return using the form called T2125. That's just the form where you list what you earn and what you spend running the business, attached to your regular filing. The trade-off is there is no legal separation between you and your business. If the business owes money or gets sued, your personal stuff, your saving, your house, that's all exposed. It also means fewer tax planning options as income grows. Second option is partnership. A partnership is basically the same idea with 2 or more people, where each partner reports their share on their own return. Same simplicity, same lack of legal protection, but now you're also tied to your partner's decision. If you go this route, make sure to get a written partnership agreement unless you want to end your friendship. Third option is corporation. Corporation is its own legal entity with its own business number and its own tax return called T2. The upside is access to lower small business tax rate and your personal assets are protected from business debts. The downside is setup costs and ongoing accounting fees and extra work on the admins since there's more compliance involved. Here's the practical version. Start as sole proprietor. It's cheap, it's fast, it lets you test your idea without drowning in paperwork. A lot of accountants use roughly $60,000 to $100,000 in profit as a general point where incorporating starts to make sense, or once your liability risk grows. It's a rule of thumb, so it's worth confirming with an accountant once you're getting close. When tax season rolls around you as sole proprietor, you can use Simple Tax to file. It's simple, affordable, and built for people who are self-employed. Link is in the description below, and that's an affiliate thing, so I may earn a small commission if you use it at no extra cost to you. Step 2. Check your business name. Before you get attached to anything, do a quick search. Google, social media, and see if your name already taken. Here's the caution. Don't overspend chasing the perfect domain. I know someone who paid $3,000 for a premium domain for a business that never got off the ground. A domain doesn't make the business. The customers do. Keep this step quick and simple. Step 3. Register your business. This is where it depends entirely on how you're operating. If you're sole proprietor working under your exact legal name, say John Smith, you don't need to register anything. The moment you add something to that, like John Smith Consulting, then you need to register that business name with your provincial registry or using an app like Owner. It's straightforward and usually under $100. I'm not sponsored by Owner, but I just mentioned it because I use it before. A lot of people start under their own name to keep things simple, then register a name later once things pick up. That works fine for freelancer style work, though it can be trickier when you're building a long-term brand. If you're skipping ahead to incorporation, you can do it federally, which gives you stronger name protection across the country, or provincially, which often quicker and cheaper if you're staying local. But for most people starting this week, operating under your own name as sole proprietor is more than enough. Step 4. Licenses and permits. Not every business needs one, it depends on your industry. Food business need health and safety permits, trades often need provincial licensing, and even home-based business can run into zoning rules if client visits or you're storing inventory. If you're doing online work, freelancing consultant, or digital services, you often need none of this. The easiest way is to check BizPal, a free government tool. You can enter your province, location, and business type, and it gives you a checklist on exactly what applies to you. Take a few minutes and it can save you from a fine or surprise later. If this is useful so far, please hit and subscribe. I cover this kind of practical business and finance tip every week. Step 5. get a business bank account and credit card to sort out payments. This is rule number 1, and I mean that. Separate your business money from your personal account. Even as sole proprietor, where legally you're not required to open basic separate account just for business. Why does this matter so much? Because come tax time, you're trying to figure out what was business expenses and what was just you buying groceries. If everything's mixed together in one account, you're stuck scrolling through months of statements trying to remember if that Thursday purchase was for business or for dinner. A separate account means your business transactions are already sorted, which saves you a lot of time. For getting paid, tools like Stripe or Vend make it easy to send invoices and accept card payments. Even as one-person operation, you don't need a fancy setup, just something to keep your money organized, your records clean from day one. Step 6. Taxes, the basics. First, write-off. Write-off is just a business expense that reduces the income you're taxed on. Things like software subscription, a portion of your phone bill, or supplies you bought for client work. Keep simple records. A spreadsheet is genuinely fine for most people starting out. But if you can't, build an accounting system using software like QuickBooks or FreshBooks. The goal isn't a perfect system, it's a consistent one. I personally use QuickBooks Online. It saves me a lot of time during tax time and let me know my cash flow position anytime I need to make a decision. Second, set aside money for taxes as you go. As sole proprietor, taxes aren't deducted automatically like paychecks. So a common approach is setting aside somewhere between the range of 15 or 25% of what you earn depending on your income level and the profits. Think of it as a bill you're paying yourself in advance, so it's not a shock during the tax time. Third, keep an eye of the $30,000 mark. Once your business brings in $30,000 in revenue over a rolling 12-month period, you're generally required to register and start charging HST or GST. If you almost hit $30,000 mark and want to know more about HST and how to register, you can click on this video. Step 7. Your business is officially open for business and you're ready to close the deals, send your invoice, and get paid. Before we wrap up, let's talk about the mistake I see most often. Number 1. Incorporating way too early, before there's even enough income to justify it. Number 2. Going into a partnership with a friend or family member without nothing written down. Number 3. Spending money instead of setting it aside for taxes, then panicking in April. Number 4. Skipping insurance entirely, even when the work involved real risk. And number 5. Spending weeks on logo or perfect website before you've made a single sale. So here's your recap. Step 1. Pick your structure. And for almost everyone watching this, that's a sole proprietorship. Step 2. Operate under your own name to start. Step 3. Separate your business and personal money from day one. Set aside a portion of your income for taxes and keep your records simple but consistent. Step 4. Get a permit if needed. Step 5. Get a business account and credit card. Step 6. Build a system to track your income and your expenses. And step 7, you're ready to make sales and invoice. In our next video, we'll be diving deep into the specific businesses that absolutely thriving in Canada right now. Make sure you subscribe so you don't miss it. See you in the next video. Bye.